calm down. No, 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 no. Whoa, whoa, whoa.
So on today's video, guys, we are going to dive into this big question, this huge question: is mortgage a scam? I actually went into a conversation with a group of people, and in their own opinions, they felt that mortgage are scams. Like, banks are actually using that opportunity to enrich themselves. That's exactly what they feel. Please, before I proceed, let me quickly make this disclaimer. This video is not a sort of financial advice, please. In my own opinion, and based on the research that I've done, and I just told you guys what prompted me to do this research, because I went into a conversation with a group of people, and in their own opinion, they felt that mortgage is a way of bank enriching themselves, just because they consider the interest rate that they pay. So I felt there is a need for us to discuss this. Since I already have audience listening to me, we have to talk about this. I've been into the internet lately, especially YouTube, and I've discovered that so many people are buying houses. Like, before you scroll down, you see, oh, this is my house, I just bought my house. And guys, it's really a good thing, and I'll be sharing this opinion, honest opinion, my honest review about this. Please, I know that I don't own a house yet. It's not my fault, but you know what they say, fingers are not equal and people have their priorities. But then I feel that some of my audience, you watching me today, you could actually be in that particular position right now where you are trying to make that decision. Should I buy or should I continue renting? So guys, please, you have to take your own team. If you are team renting, gather this way. If you are team buying, please gather this way. Drop your own opinion on the comment section.
I know you gotta dress up for the club.
Hello everyone, you're welcome back to my channel. It's your girl Blessing of Blessed Blessing channel. On this channel, I film content on how you can migrate to the United Kingdom, life generally in the UK. I bring out information that will make your transition to the United Kingdom very smooth. If this interests you, please consider subscribing to the channel, and also do not go without hitting on that notification bell so you get notified anytime I upload new videos. Let's move right into it. First of all, what is mortgage? Mortgage is all about you approaching a lender. It could be, you know, a bank or a building society to lend you some money with the purpose of getting a house, like purchasing a house wherever in the world. Is the same. That is what mortgage is all about. Like I told you from the beginning of this video, we are going to determine if it's a scam or if it's really worth doing. First of all, we are going to go with this scenario. If at the end of the day you are able to get a house that is worth £250,000 and you're expected to pay 5% deposit on this house, which is £12,500, with the interest rate of 6.5%, that takes me to interest rate. Interest rates in most cases, especially if you're a migrant that came to this United Kingdom, guys, after staying 2-3 years in the United Kingdom, you decide to get a mortgage, the interest rates you'll be paying is likely to be up. They will consider some factors. Okay, what happens if you decide to go back to your country? What happens if your visa expires and you are not able to renew? Yes, they know they would definitely get their money back because they may likely resell the house and get their money, okay, and give you your own equity if that becomes the case. But then they don't want to be at that receiving end, like stretching their body, going through all that process. So because of that, they have to make sure that they tighten their knot, you know, ensuring they give you this mortgage at a very high or considerable interest rate. What is equity? Equity is that particular part of money that you contribute to your mortgage that belongs to you. In this case, 12,500, because that's the deposit you are paying to get that house. Let me quickly go to the reasons why some people feel that mortgage is not a good investment. One, the repayment period. There are some cases where you have to pay this money, the repayment amount, for up to 30-40 years. For instance, you are 40 years old now and you decide to take a mortgage lasting up to 30 years. That's to say you finish paying that money when you are 70 years old. Another reason people feel that they would rather continue renting than buying a house. You finally get a house in the United Kingdom. Remember, you are paying like 1.5 every month from your salary. Because of that, you wouldn't want to explore outside your current location. That's to say you'll be tied down on that location for the rest of your year. Like, you could actually resell and get another mortgage in another location. But you know, the time it will take for you to even get a buyer, that's another thing. You have to start looking for estate agents, you know, looking for a buyer before you are able to get a buyer. It will take quite long period of time. So that's why some people would rather go for renting. Another reason why people feel that it's not really a good idea is because when they are renting, you discover that if anything spoils in your house, all you have to do is just to put a call across to your landlord. Okay, my boiler is bad, my heater is not working, the rug is bad, I need the rug to be changed. If there is anything maintenance that comes out from the house, all you have to do is just for you to put a call across to your landlord. But when you are the owner of the house, who are you going to call? You bear the cost. So in as much as you are making plans for the cost of purchasing a house, always bear it in mind that you always have maintenance costs coming up, so you should make budget for that. Another reason why people would think that it's better for them to rent, when you are renting, you don't really need to keep out that huge amount of money for deposit, because the truth remains that getting that deposit not be moi, honestly, if you understand what I mean. You have to save for years for you to get that deposit. In this case, £12,500. It's huge. You can't just get that in a year with family expenses and all that. So you have to build up your savings for you to achieve this. But if you choose to rent a house, it's just for you to have your normal deposit, highest 1,000, 1,500, as the case may be. That's the deposit that you pay when you are renting house. It's not as high as the deposit you pay when you are purchasing or when you are going into mortgage. So because of this, many people feel it's best they continue renting. Let's now look into most of the reasons why people would consider to buy a house than to rent a house. First is this: remember that this repayment you are paying every month, like this case 1,500, this money is building up your equity. Why your equity is growing up, your total net worth is actually growing. Yes, I understand that this is not a liquid asset, like it's not asset that you could actually convert into cash. Okay, I want this money, let me just, but you could actually put part of the money if you want. You may decide to resell the house at the end of 5 years, and you will still receive reasonable amount of money. Probably you are currently paying 1,000 or 1,200 as house rent every month to your landlord, against paying 1,500 as repayment plan to your mortgage. This 1,200 you are paying to your landlord is never going to come back to you. It's gone and forgotten. Okay, but this 1,500 is building up your equity. So at the end of the tenure, you must have completely paid for the house if you decide to wait until the end of the tenure. Now you have the full possession of the house, you have the full equity of that house. But then if after, let's say 5, 6, 7 or 10 years, you decide to resell the house, equity that you must have built over that 10 years, over that 5 years is huge. Is big enough for you to add some money and even acquire your own house without any mortgage. Let's assume that we got the mortgage for £250,000 and the deposit was about 5% deposit. Mortgage is supposed to last for 30 years. The monthly repayment is £1,400. 5% of £250,000 is going to be £12,500. It's an interest rate of 6.5%. After 5 years, we want to sell this house. We discover that the house has appreciated with 2%. Okay, that's 2% annual appreciation. The first step is house price after 5 years. With a 2% annual appreciation rate, the house value after 5 years will be £276,530. So what this means is that after 5 years, the house value is over £276,000. Step 2, mortgage balance after 5 years. With a mortgage repayment of £1,400, okay, we are paying £1,400 every month now. Remaining mortgage balance after 5 years is approximately £225,000. Step 3, net sales proceeds. 1, sales price £276,530. 2, selling costs. Remember that the cost of selling the house, you are going to pay estate agents, you are going to pay other people, get lawyers and other expenses. So let's assume that the percentage of the fee that you pay to the agents, lawyers and all that is about 2%, okay, and that's about £5,531. Then net sales price, 276,530 minus the total cost of selling the house. Okay, that's the amount you pay the agencies and all that. So you have £270,999,000. Please, if you have any question, drop on the comment section. I believe this is clear. Then step 3, guys, pay off mortgage balance. Now we want to calculate how much you will get after selling the house. If we remove the total amount that we have paid, which is the equity, Remember from the beginning of this video, I told us what equity was, okay? So after we have removed this, we now have 45,999 pounds. Okay, the step 4, which is add initial deposit. Remember that you made initial deposit of 12,500 pounds from the beginning, so include your original deposit of 12,500 pounds. You will now have a total of 58,499 pounds. Step 5, total profit. To determine the total profit, we have to subtract the total mortgage payment made over 5 years, okay, which was about 84,000 pounds. How did we get this? Remember, every month we were paying 1,400 pounds, so that's about 1,400 pounds for 12 months, which makes a year times 5. We will have 84,000 pounds. This is part of our equity. Also, to determine if there is gain, is it a profit or is it a loss? 58,499 pounds, which is the money realized from the initial deposits we made, okay, and the 2% increment of the house value, okay. We now minus it from the total amount we have been paying. We will then have a loss, guys. We are having a loss. I repeat, we are having a loss of 25,501 pounds. This is why I asked us initially, is this really worth it, getting a house in the UK? However, this is two-sided ways. That's why I said the pros and the cons of getting a house in the United Kingdom. Let's look to know if this is really a good investment. Guys, look at the screen. It says for prompts, equity building. So we bought the house for 250,000 pounds. Okay, we made deposit of 12,500 pounds, which is our initial equity. Then, because the house appreciated with 2% in 5 years, okay, so we now have more equity. That was how we realized the 45,999 pounds. The 5% deposit lets you leverage a valuable asset. To be honest, in this scenario, the deposit was low, which is really achievable. Like, it's something that we can actually do. There are some other houses that you could actually get as high as 15%, 10%, 20% deposit. But then again, the higher the deposit, the higher your equity. That's the tricky thing there, okay? Let's look at the cons. At 2% appreciation, you would incur a loss of 25,505 pounds, like I told us earlier, okay, after 5 years, due to the high interest payments and selling costs. Then the next one, high cost. Most of your monthly payment go towards the interest. Like I told us, the interest is high, to be honest, okay? Not reducing the principal significantly because the interest rate is high. So most of your repayment of 1,400 pounds every month goes to the interest rate. It's like you are servicing the interest rate. And at the end of 5 years, you still had a huge balance to pay off from the loan. That's from the mortgage. What happens if the value of the house depreciates? What happens? That is another thing you have to consider. That's what this part 3 of this section is talking about. The risk of appreciation, slow appreciation. The truth is that it's a good thing to get a house in the United Kingdom. So guys, this is my findings. Like I said, leave your thoughts on the comment section. I may be wrong, I may be right, but let's have that conversation on the comment section. Tell me, what do you think about all this? Do you think it's good for you to buy a house through mortgage in the United Kingdom, or is good for you to continue renting? Thank you for watching. I remain blessing, a Moses of blessing channels. Thank you.